Bismillahirrahmanirrahim. Assalamu alaikum, dear students. Here is another lecture number 2 of the subject Business Taxation from Najma Ali, lecturer commerce at Government Girls Degree College, Sukkur. In previous lecture, we had gone through the contents of the whole subject and the introduction about the taxation, that the tax is the levy which has been taken by the state as an inherited rule or inherited right from the citizens, that those citizens are giving that as a charge or as a fees, and government is collecting it as a revenue. The reason for collecting such revenue is to invest it further into the public offices and other services provided by the government. The characteristics of sound tax system was also been discussed, that the system should be convenient, fair enough, as well as efficient one, and clear and certain, that everyone must be able to understand and fill their returns without any hesitation. Taxation system in Pakistan was also been discussed, that in Pakistan we have taxation system of getting taxes and providing public services, and that tax are levied by FBR as a Federal Board of Revenue, and that FBR is coming under the guidance of Finance Ministry, and that Finance Ministry is under the guidance of Prime Minister and President. So let's start today's lecture. The lecture today is about history and evolution of tax law in Pakistan. As if you remember, as all of you remember, that our country Pakistan has got independence from Indo-Pak in 1947, and before that it was actually promulgated by British rulers in undivided India, and that was year 1860, and the first time it was imposed with the name of Income Tax Act 1860. This law was remained promulgated for the 5 years, and the main characteristic of this rule was that agricultural income above rental value of 600 per annum was been taxable. Income tax rules were not been applicable for 2 years. It was been you may say that stopped for 2 years, and it was been again restarted or reimposed in 1867 with another name or new name, that was License Tax Act 1867. This income tax said that income earned up to 200 rupees per annum was not taxable. The tax liability or the tax percentage was 2%. The major characteristic of this act was that agricultural income was totally exempted from tax. In 1868, another certificate act was being promulgated with a new name as well as new obligations as well as new characteristics. The main characteristic was that up to 500 rupees earning or the income was not taxable, and more than that was taxable under percentage of 1.6%. The Income Tax Act 2 in 1873 was being promulgated with the main characteristic that agriculture income was been again included into it, and it was taxable from 1873 again. After a gap of 4 years from 1873 to 1877, there came another act, that was the License Act 1877, which was being promulgated up to 1877, and which was being promulgated up to 1886. In this act, the tax on trade as well as land and other along with other characteristics, it was being imposed. Income Tax Act 1886 up to 1918, up to 32 years, another act was being imposed, and this went up to 32 years long period. The characteristics was being properly defined into this act. Afterwards, in 1918, another income tax act 1918 was being promulgated. Here the total income, here the difference between the total income and the taxable income was being defined. This topic is will be discussed, students, in the upcoming lectures with you, and for this reason we have another chapter. We will discuss it in more detail. After many difficulties faced due to this act, Income Tax Act 1922 was being introduced, and after independence of Pakistan, Pakistan also adopted the same Income Tax Act 1922. And this act was continued for 57 years till 1979, and this was a longer period that after independence this Income Tax Act was being promulgated in Pakistan. Income Tax Ordinance 1979 came into being due to many difficulties in the previous act, and another reason were those requirements and the characteristics which were being included in 1922 act was been actually for both Indo-Pak countries. So now onwards, Pakistan wanted to make it as a separate act for this whole country. In 1985, government set up National Tax Reforms Commission to suggest means and ways for the improvements of tax system, and afterwards that this National Tax Reform Commission came up being with the new ordinance with the name of Income Tax Ordinance 2001. This ordinance was actually made in 2001, but came into being or was being promulgated in 2002. Which is actually now in force nowadays in Pakistan. Okay, students, the next topic is about kinds of taxes. There are almost 6 types or kinds of taxes which have been levied by the state at any state, whether it's Pakistan or at outside in the world. These taxes are: number 1, direct tax; another is indirect tax, and third one is value added tax, capital gain tax, excise tax, documentary tax. Number 1 is direct tax, and as it is simply clear from its title that the tax which is levied or taken from the citizens directly on their earnings, how much they are earning, the tax will be increased or decreased on the basis of that. And the person, for example, as we take the example as income tax, for suppose if a person is earning 1,000 rupee, 1 lakh rupee, then the tax levied upon him will be according to that amount of earnings, as well as if a person is earning 10 lakh rupees, that percentage will increase according to his earnings. Secondly, indirect tax. The indirect tax is actually the tax where incidence of tax can be shifted by the person on whom levied to. For example, you may say that indirect tax is that tax in which you are using certain product or certain service, and that service is actually charging you for the tax. If you are not using that service, that tax will not be charged to you. For example, if you purchase a soap bar, that indirect tax of sales tax will be imposed upon you. You have to pay that sales tax. Unless you are not purchasing it, you won't be asked to pay such tax. Third type is value added tax, which is also known as VAT, means VAT. Tax imposed and collected on every sale, barter, exchange or transaction deemed to sale of taxable goods, properties, lease of goods, services, or properties in the course of trade as they pass along the production and the distribution chain are known as value added tax. Value added taxes are those taxes which are actually added from one person to another. For suppose if I am purchasing raw cotton and finishing or converting or transforming it into a thread, now I have actually included certain value into it. Then this thread will be sold to fabric industry or a textile mill. Then that textile mill will transform this thread into cotton. Now they have again added certain value into it. So that type of value addition is actually taxable under law. So that value added taxes are also levied by the government. Another type of tax is capital gain. Capital gain is a financial term. As you all know, that capital gain is the amount which you are not earning as a revenue, but that gain is acquired by selling any fixed good on a appreciated price. If you have purchased a certain fixed asset for rupees 10,000 and you are selling it for rupees 12,000, then this appreciation of 2,000 rupees is actually capital gain. So this capital gain is also taxable under law. Excise tax, the tax applicable to specified goods manufactured within Pakistan for domestic sale or consumption is known as the excise tax. A specific tax is also collected. Mostly excise duty or excise tax is applicable on alcohol products, petroleum products, and tobacco products. Documentary tax, here in the topic, that is the last type of last kind of tax, that tax on documents, instruments, loan agreements, paper agreements evidencing the acceptance, assignment, sale or transfer of obligation, rights or property incident thereto. All the documents, just like stamp papers, we pay if we purchase 50 rupees stamp paper, then we have to pay it 50 rupees for a stamp paper, a stamp duty, and other amount for its written material. So that is a documentary tax. Other taxes are also there, just like toll tax, which are also being paid by these are actually kinds of indirect taxes which are paid by the citizens without showing their income, but only using the services or the products of the state. Another topic here is components of income tax law. The components of income tax law include Income Tax Ordinance 2001, the main component. Another is income tax rules framed by the board. Third one, notifications, circulars and orders. Fourth one, income tax case law. And fifth one, finance acts or the ordinances. Income tax ordinance or the components are the basic constituents of income tax law in our country. On its basis, the whole taxation structure of the country is founded. The whole procedure of taxation, including matters regarding payment of tax up to collection of tax, are included in these components of income tax law in Pakistan. So income tax ordinance, as I have already discussed about it, is the main ordinance which is prevailing in the country, and which is the main pillar, or you may say the among four pillars of the income tax law in Pakistan. It includes penalties, assessments, refund appeals, which has been provided in the ordinance, and it consists of 13 chapters, and each chapter deals with a particular subject which has been divided into different parts. These many parts are further subdivided into divisions. There are almost 240 sections of the new ordinance as compared to 167 sections of income tax ordinance, which was been already promulgated in 1979. The ordinance, this Income Tax Ordinance 2001, contains 8 schedules, and these schedules are also treated as a part of the ordinance. The changes in the Income Tax Ordinance 2001 are brought off about by the Finance Ordinance or Finance Act every year. Such changes are of a permanent nature. Another main pillar of income tax rules or income tax law in Pakistan is income tax rules. These rules are actually made by Federal Board of Revenue and are given in the Finance Act. As ordinance has not been changed since 2001, but the rules are changed every year through Finance Act. Nowadays Finance Act or Income Tax Rules 2019 are prevailing as they are working along with the Act or the Ordinance of 2000 Ordinance of Income Tax Ordinance 2001. Federal Board of Revenue has assigned this power under Section 237 to Income Tax Ordinance 2001. These rules are notified in the official gazette, and since 1924, CBR has framed a number of rules regarding rates of depreciation, registration of firms, submission of returns, forms of appeals, etc. are included in these types of rules, income tax rules, which are treated as a part of income tax law. The next component of income tax law is notifications, circulars and orders. So students, all those notifications issued by FBR and their authorities, all those circulars which are being time to time issued by the FBR, as well as all those orders which are being passed by FBR from time to time, are actually the part of income tax law in Pakistan. Not only the Income Tax Ordinance 2001, all these notifications, circulars and orders are also working, or these are actually binding on all the income tax authorities and the persons employed in the execution of this ordinance. These circulars are not binding on taxpayers because these circulars are officials one. Okay, the next component is income tax case law. As we all know that case law is the law which is actually made upon the precedents made upon the precedents by the courts. Those precedents are made on the cases, previous cases or previous judgments made by the courts. So these decisions of the courts are known as income tax case law, and the reference to such decisions are subsequently made in order to get necessary guidance. Thousands of cases regarding the interpretation of tax laws and the definitions of terms used in the ordinance have been decided by the courts. So these precedents are actually used as the income tax case law. Here is your home assignment, students. A small assignment or a simple essay. You have to write an essay on the tax system, its types, and how tax system is working in Pakistan. As you have gone through both of the lectures, lecture number 1 and lecture number 2, as well as you have gone through the simple homework assignment in the last lecture. So on the basis of all that criteria or all that information, you can easily make an assignment on these small topics or headings. And inshallah in the next lecture, in lecture number 2, not in lecture inshallah in lecture number 3, we will be discussing definitions of business taxation terms. That is a second chapter of course content, and their details wherever that will be necessary. And the third topic will be inshallah difference between revenue and expenditure. Thank you students for listening, and